Hey everyone at UB, welcome to another video. In this video I'll be going over my most recent Bitcoin trading range. It doesn't really matter when you're watching this, but if you are interested in trading with trading ranges, I highly suggest you watch this entire video. This will basically go over how I incorporate trading ranges into my personal setups, what I look for, how I define a trading range, and all of that good stuff. Of course, this is not a way for me to give you hindsight analysis or anything like that. There was no official trades by me made because of this trading range. This is just a very, very clean range, and I think it's a great example of what I primarily look for. Okay. So firstly, if you don't know what a trading range is, if you are in the Haven, you can go to my education channel, scroll up a bit, go through the first initial paragraphs of what I said about trading ranges and all the examples, and that will give you just an introduction. I'll be using some terms from that in this video, so they may be confusing to you if you haven't read that entry yet in my education channel. So firstly, I decided my range high because of the extreme reaction we had, the extreme smackdown we had after sweeping the highs here. Okay, so for my trading ranges, I look for areas that we get extreme reactions and then respect that area going forward. And that will make sense in a couple seconds here. So, for example, I like to highlight highs and lows. Okay, so you can question, okay, well, why didn't you highlight these lows? Why don't you highlight all of that? And again, that will be answered by the end of this video. But firstly, I really liked this high here because you can see that it's confluent with some resistance up in here. But primarily, it's just an area that has highs that are not swept. So I trade also based on liquidity. So I look for areas with the most amount of liquidity that it is easiest for price to get to. And that was one of those areas for me right here. Okay, so I highlighted this high, drew a horizontal. We saw a very violent reaction after sweeping those highs, closed below the high. So that to me is now going to be my range high. Now there's no real confirmation for that yet, but I just like to start highlighting the area. So if in the next hourly candles we do see confirmation, then I know, okay, this is why price was rejected here, right? So the next area, obviously I didn't have my range low set yet because we didn't get this violent reaction for a couple hours later. So again, same idea. I have my low marked right here, and we had a violent reaction after sweeping this low, which you'll see when I press play on this replay function. But again, the question you may have is, why don't I highlight this low? And I don't highlight that low because we don't see a very violent reaction at all after sweeping the low. Sure, we see a bounce, but for price to bleed right back down a couple hours later is just not the reaction I was looking for. I mean, you could see right here, as clear as day, the violent reaction I'm talking about. And I just didn't see that from this low here. So I highlighted the next low and was hoping to see some sort of strong reaction from that area. You can see that there we do have that strong reaction. You could see that we had a $2,000 reaction after sweeping the highs here, and then a $1,300 reaction after sweeping the lows. And again, I'm not looking for any specific dollar amount that price has to move in order for it to be a strong reaction. But I'm not looking for something, like I said, right here, where we bounce and then just roll right back over. That would not classify as a range low for me. Okay, so now we have our established trading range in my eyes. We have our highs here. Highs are swept, lows are swept. Now what? Now, when you're trading a trading range, you basically ping pong between the trading range until you get a breakout of either direction. So how you play a breakout of either direction is, of course, you're ping ponging, and then when we break out, you buy the retest, and then your stop is something like below the equilibrium, take profit, whatever. So when you're trading a range, you are strictly trading from one side to the other. You really shouldn't have a strong bias when you're range bound, because that will really just hurt you when you're trading in the range. So something like this, you could make some pretty clean trades based off of. Okay, so now we have our trading range bouncing between here. And now we just have to think, okay, where are areas of liquidity based on my trading range that I already have set? How can I trade this range? Okay, because I'm always looking for sweeps everywhere within my larger trading range. Okay. So here we have a low set. I chose this area again because we had a decently strong bounce from it. I could have also highlighted this area. Okay. I could have also highlighted this low right here as well. Okay, I'll just do that for educational purposes. Okay, and I think I forgot to mention what this blue line is. This is just my equilibrium, so this is 50% of the trading range. I did that by using the fib tool. Went to 0.5, drew a horizontal line based on that 0.5, and that's it. Okay, again, that's just in my first post, my education channel in the Haven. Anyway, I highlighted my lows. Now it's time to see the reaction based on the areas if and when those lows get swept. Okay, so something like this, if we were to reject here, sweep the lows, reclaim the equilibrium, that should be a long signal. Okay? Nothing going on here. Swept the highs right there. Look at that strong reaction from the highs. So if you really wanted to, you could make a little mini range right here. So I'll change the colors for you a bit so you can see it. We'll go purple. So this could be like your mini range, right? So now we have a sweep of the highs here. Let's say you wanted to short something like this. I mean, that would be pretty tight, but you can now go for a sweep of the lows. Okay, now the lows have been swept. Obviously, you wouldn't have gotten filled there, right? Because price never retested that range within a range swing high, right? So obviously, you wouldn't have gotten filled there, but that's just an example I was showing you. So lows have been swept here. So this is really what I wanted to see for a long, as I think I just said. So something like this is probably what I would normally take. So when price sweeps some lows and reclaims the equilibrium, you want to take trades based on that equilibrium and use that equilibrium as your entry point or exit point. So for example, if let's say we're below the equilibrium, right? If we break down here, we retest this equilibrium, all we're doing is taking a short, stop at the equilibrium, or entry based on the equilibrium. Stop loss, obviously discretionary. You have to figure that out based on lower time frame stuff. But and then your take profit would just be the range low. Same idea for if we're above the equilibrium, you should be looking for longs to the range high. And that's it. That's literally how you trade a range. So now something that I noticed in this trading range, let me delete this because that's not important. I'll keep these lows highlighted. This was swept, so this low doesn't necessarily matter too much anymore in terms of an entry. That's not exactly true because lows can be flipped into resistance. So this low still does matter, but we should be seeing a move now to the range high because the lows are now swept. But something I noticed here is I think I highlighted that diagonal. Yeah. Okay, so this is the diagonal I highlighted. So obviously things develop within a trading range. Diagonal, that's as clear as day. I saw it on the 30-minute. So now my entry trigger would be, okay, if price were to fall back below the equilibrium, pop right back above, something like that. I mean, like, my entry trigger is now, I should say, when price is above the equilibrium and the diagonal, it's a long to the range high. Okay? So all I'm doing is evolving my entry triggers based on what price is giving me. Right? Does that make sense? So we could see here that the diagonal is going to hold price down for a bit. I don't care about what's happening right now at all. All I care about is if price is above the equilibrium. This is yes. So that's a yes. Is price above the diagonal? No. So I do not have a long trigger right now. So now I'm just chilling. Okay. Here's my trigger. Okay, so now what I want to see is we got a 30-minute close above there. Ideally, we see an hourly close above that. Let's say you're just trading this on the 30. You scale in 10 to 20% of your total position size above the diagonal. This is how I trade most diagonals. I'm scaling in. So there's 20% there. Okay, I'm scaling in 20%. Take profit will be based on these highs right here. Okay, just on my range high. This is my range high again. So I'm scaling in 20%. And when I see an hourly close above the diagonal, then I'm scaling in the remaining position size. Okay, so there we go. we get a clean hold of this diagonal. The hourly has now closed above it, so now I'm in a full long position. And your stop loss could be either, okay, your stop loss could be one of two things. Firstly, your stop loss should absolutely be below this low here, because we swept these lows, had a strong reaction. And what's interesting about this low in particular is after when we retested this area, it's a perfect tap into that low. So we flip this area into support. So if things are bullish, price should not sweep this low. Okay, because it's clearly an area of support. Obviously give yourself some breathing room. So that should be your hard stop loss. So if you enter your stop loss at that price. Okay. Next, what you'll want to do is if price begins to drift below the diagonal, okay, and flip the diagonal into resistance, you just close the position. And then it's right back to your entry triggers. Is price above the equilibrium? Is price above the diagonal? If yes, enter into a long. So you're saving yourself probably like 0.5 R if you close early. Okay, so we see what price does here. Perfect tap of the range high, and we are out of our trade, essentially. Obviously, I didn't trade this. This is just an example. This is not a way for me to give you hindsight analysis. This is purely an educational tool. So that's how you could have traded this trading range. Okay, so obviously a diagonal came into play a lot in this specific trading range, but overall, you can see how I can use trading ranges to my advantage. Even the range high, look at the violent reaction from the range high. Still, after we swept it almost 2 full days later, we're still getting a strong smackdown from that area. Okay, so now let's say that trade's over with. Now what I'm looking for is these lows have been tapped. We have our successful move to the range high. So now our bullish argument is no more until we get a sweep of some lows down here, or we break above the range high. Okay, because if I'm longing and we're still range bound, what am I longing to? Because we're still range bound, right? So we're still going to be range bound until we break either the range high or the range low. Okay, so this is still range bound. You cannot have a strong bias when we're range bound. So my next trigger, I think I literally just said, but I'm waiting for a sweep of these lows here or this low down here. So we can see what happens and how we're able to trade this. And also, we could be looking for shorts here. Look for a short maybe above this high. You could place your stop, and your take profit 1 could be the equilibrium. Take profit 2 can be these untapped lows right here. Take profit 3, take profit 2 could actually be the range low. And then take profit 3, you probably want to be 80% out of this range, out of this position, because ideally we're still going to be range bound. But if we're not, you can hang on to 20% for a sweep of these lows here. Okay, so that's how you would take the short side as well. Let's see what would have happened. And we get a perfect tap of the equilibrium. Look how the equilibrium is holding as support, right? For now, obviously. But again, if you didn't catch a short from up here, base your trade around this equilibrium. So you can have a stop like here, and when that equilibrium flips into resistance, you enter into a short. So this probably would be my trigger here. After this 30-minute candle closed, because we got such a weak bounce from this area, it's very similar to this bounce here. So we put in our low, have some sort of violent reaction, but bleed right back down. You see what I'm saying right here? So this is very similar, where we bounce, have a decently strong reaction, but we really don't go anywhere with the bounce. We just roll over. And this is that would have been my trigger. Obviously, hindsight analysis, but that would have been my trigger there. And here we go. We got a sweep of these lows here, and you could just see how important these lows are within our trading range, right? Because now we're starting to attempt to bounce from that area. Obviously that didn't happen, but now we're back at our range low, so we would have hit our take profit there. Either you close like 80%, leave 20% running, but really our last area of untapped lows are right down here. And again, your trigger would be when we break that range low. And you can see, look at that sweep of the lows right here. We're starting to get a very strong bounce after sweeping those lows. And isn't that so interesting how this low is now flipping into resistance? I mean, look at these 30-minute candles. It's stopping perfectly right at this low. Right? Pretty cool. Even this range low, right? Look at this ugly 30-minute candle we put in. So clearly that was acting as resistance. And again, look at this low. You can see this current 30-minute candle is getting rejected by this previous low. I mean, I just love trading price action because stuff like this is just so interesting. Look, okay, 30-minute close above the range low, clean flip of resistance. Now we go right back into our next low. Okay, flipping that or attempting to flip that into resistance. And now here we are right now. This is current price action. This is all up to date. So that's how I use trading ranges to my advantage. Now, the next question would be, okay, now how would I trade this? And we have our low here. We're going to do it the same exact way, right? We had our low there, strong reaction. Okay, we have our low here. So now we just highlight these two areas, and if something like this happens, and we reclaim the range low, remember these two areas are going to be the most important. These three areas, range high, equilibrium, range low, most important three areas. So we can use that in confluence if this low is swept, and then we reclaim the range low, then we long with a stop below the low that swept this low right here, and a target at our equilibrium. That's all. That's how you approach a trading range. Obviously, this is a example that already played out, but this is how I approach all of my trading ranges. I set my range high by looking for areas that had a violent reaction from, and then I base my trades on the range high, equilibrium, and the range low. If price is above the equilibrium, you look for longs to the range high. If price is below the equilibrium, you look for shorts to the range low. I really hope this video makes sense. If you have any further questions, as always, please feel free to ask. Thank you.